Thank you, Mr. Chairman. Thank you, Mr. Secretary. It was certainly a pleasure in my career to have 4 years working at the Treasury for one of your predecessors, and I enjoyed those days. Following up on Mr. Lucas, Mr. Stivers, Mr. Tipton, I want to talk a little bit about this community bank approach as well. Section 112 under the resolving regulatory conflicts and looking at burdensome regulation really does give the FSOC a lot of power in that regard to be a leader, which I think is the purpose of the FSOC. And I agree with Mr. Williams that I encourage you to take that mantle that all of us in government do, which is you can do more than one thing at a time, which is that management responsibility in addition to trying to implement Dodd-Frank.
And Congressman, as I indicated earlier, we have not ruled out using it, and I'm happy to take a look at whether it's the appropriate time.
Good. Well, I'd like you to consider the use of cost-benefit analysis at the FSOC level and looking across the regulatory system generally. What would be your thought about that?
Well, look, cost-benefit analysis has many different meanings. If you look at the broad cost to the U.S. economy of the financial crisis in 2008, it was enormous. It wouldn't have shown up in any cost-benefit analysis that was done before the crisis itself. So we have to find a way of looking both at the impact on a firm when you ask the question of cost-benefit analysis, but also the entire economy.
I understand that.
And I think balancing those considerations is part of what the whole Dodd-Frank lawmaking and rulemaking process has been about, to try to make it more costly to do things that are risky, internalize those costs, and to protect the general economy and the general public.
Well, you've had two positions now that I think have the prudential responsibility there at OMB and at Treasury, and these are important places to look out for that economy generally and not get down in the weeds of an individual regulator. But there are regulations that, while well-intentioned, have costs that exceed their benefits. Just this week, I got a letter from a banker that looking at the ability to repay rules under Dodd-Frank, they looked back and they used to have an 85% approval ratio for their 1 to 4 family mortgages, and now it's under 40%. Because of the burden of those rules. And so one way to use a cost-benefit analysis when you're looking at residential lending is to look at all the rules, not just Dodd-Frank rules, but the qualified mortgage rule, the effect of appraisal rights, et cetera. So I encourage you to do that. And I encourage you, like Mr. Stivers, to put on the agenda of FSOC the burden on regulatory institutions as an official agenda item. Copy of the Fannie Mae and Freddie Mac conservatorship agreements. I've asked for that for over a month, and I have yet to get a document. Could that be put on the list and have that sent to me, please? I have the preferred stock arrangements with those two companies, but I need the conservatorship arrangements.
I'll look into it.
Have you, on this email issue, I think American people are really frustrated by it, and I urge everybody in the administration to be focused on this. The IRS example on losing emails, all of us in the private sector would be excoriated by our regulators were we to lose our emails. Have you changed the policy at the Treasury since the IRS matter came up in terms of tracking them, managing them, overseeing them?
Well, the Treasury policy is that we do our business on official email, and that at least for the main Treasury, that there's preservation. The IRS system is a little bit different, and I know that every effort is being made both to recover what was lost. I'll have to get back to you on the.
Please do, because I think it's double standard that frustrates American taxpayers and business owners. Like in FINRA for regulated broker-dealers, the rule is all electronic mail and text has to be retained in a non-rewritable, non-erasable format and subject to daily review by a regulator or management and a 3-year retention. I mean, it doesn't strike me that that's the standard in the executive branch. Is that a good standard, that FINRA standard, sir?
Well, obviously, it is a standard that keeps email available for regulators to see, and that's a good
Well, so if regulators should be able to see the emails within a broker-dealer, shouldn't we be able to see all the emails in the executive branch agency?
There obviously are differences, but I'm happy to take a look at it and get back to you.
Thank you very much. I yield back, Mr. Chairman.